Welcome to Thoughts on the Market. I'm Michael Zezas, Head of Public Policy Research and Municipal Strategy for Morgan Stanley. Along with my colleagues bringing you a variety of perspectives, I'll be talking about the intersection between U.S. public policy and financial markets. It's Wednesday, April 14th at 10:30 a.m. in New York. This week, we circle back to the debate about infrastructure spending in Washington, D.C. Last time, we focused on the impact of how the plan would be paid for, namely the impact of deficits and tax increases. Today, we focus on something a bit simpler. What sectors of the stock market fundamentally benefit from this planned pickup in government spending? To answer this question, we just follow the money. One obvious place to look is at cement and steel companies. With a plan to spend about $1 trillion on transportation, water, and affordable housing, that's a lot of steel and cement that will be put to use. No wonder our colleagues who cover these sectors have now started referring to this as the beginning of an infrastructure supercycle that could over time lead to about 200 million tons of cement being consumed. Another area that benefits is the clean energy sector, something recently highlighted by our utilities and clean energy analyst Stephen Byrd. The White House's infrastructure plan proposes extensions of key tax credits for the sector, new tax credits and methods for developers to immediately realize their value, and over $170 billion to support the development and production of electric vehicle technology. So not only should companies that produce clean energy benefit, but also the ones that manufacture the equipment that produces clean energy, given the rise in clean energy demand this would create. Finally, one less obvious sector to watch is healthcare, namely the larger managed care providers. What does this have to do with infrastructure? Well, the White House is signaling that it will also include human infrastructure in its plan, with background reports in the media suggesting that an expansion of the Affordable Care Act subsidies and a possible lowering of the Medicare age could both make it into the legislative effort. Our collaboration with healthcare analyst Ricky Goldwasser on the impacts of such policy changes suggests there could be a fundamental positive from these policies for larger healthcare providers. That's because while the government may be doing more healthcare business and at lower margins, there would be more healthcare business to do overall, and the larger companies would have the scale to engage profitably. Thanks for listening. If you enjoyed the show, please share Thoughts on the Market with a friend or colleague, or leave us a review on Apple Podcasts. It helps more people find the show.
The preceding content is informational only and based on information available when created. It is not an offer or a solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.